The most interesting trend that we saw in Q2 was that AI funding massively picked up. It doubled quarter over quarter and also year over year almost to 24 billion. And these are global numbers. The US was around 70 billion. So we saw a lot more money go into the AI sector this past quarter. And I think what's interesting about that is when, ChatGPT launched, for all of 23, we did see AI funding pick up. We did see proportionally more dollars go into AI. We saw that globally. We saw that in the US market. But it's almost like 6 quarters after that launch that you see the massive uptick. And I think what that shows is within the private markets, it takes time for those companies to grow. It takes time for those investors to find those targets. A lot of these companies have raised, multiple fundings over this time, and they're now at the point where they're raising those very, very large rounds. So, AI as a sector represented 30% of all investments globally. So pretty noticeable. And obviously the biggest one was Elon Musk's XAI, which was a $6 billion round. But there were a lot of other companies in the sort of AI sector that raised super large rounds.
Welcome to Sorcery. I'm your host, Molly O'Shea, founder of Sorcery. Today we have Gené Teare, Crunchbase News' senior data editor. Gené conducts strategic research to explore and report on trends within private company data. She focuses on global venture funding trends, artificial intelligence, fintech, and gender equity in venture and tech. This is a fun conversation because it's around Labor Day, coming back from the VC slumber when tech markets are very quiet and people are out on the beach. So hopefully we can provide some perspective for macro trends and a bit of a refresh on what we do. Hi, Gené. It's great to have you on.
Hi, Molly. Great to be here. Thanks for inviting me.
Of course, I'm so excited. So you are a senior data editor at Crunchbase News, and you have all the data on the markets. So I would love to just go deep into this, and this will be airing right before Labor Day. So it's going to be a good nod to all of the VCs who have been in the Hamptons, who've been on the Mediterranean, or wherever they like to hide for the summer. But that being said, I'd love to just get back into it and understand what do we need to know coming back to work.
Sure. And just, looking at Crunchbase and sort of where I've been at Crunchbase a very long time. And my work at Crunchbase has always been focused on the data and working with the data. I used to run a lot of our data teams and data projects. And that has massively ramped up since I've left that team. And then I started reporting in 2015 on what was happening from the data. So when you work with data all the time, you want to do something useful with it. And one of the first reports I did was looking at women, female founder trends, just because we realized we have this great founder data set. There was a whole discussion taking off in Silicon Valley about equity for women. And I thought, hang on a minute, we could look at this. And so we were the very first data set to add gender to the data set and then really report on some of those trends. And I know we'll talk about that a little bit later. So I feel, very privileged because I get to look at the data, and there's a lot, we follow industry leaders, we talk to a lot of analysts, we talk to VCs, we talk to founders, we get a good sense of what's happening from talking to people in the market. But then it's always super interesting to look at what the data is saying alongside that and whether the data fits with the narrative that people are seeing or whether there's different things happening in the data. And I feel like I have this advantage because I'm always discovering and seeing things, because you can look back and sort of understand what does this all mean. And I think from a venture perspective, we are, broadly speaking, we're 2 years into a venture slowdown. And so we really saw the slowdown kick off in Q3 2022. It started in Q2. Q1 was very strong in 2022. So we're 2 years into the slowdown. And what we've seen is from Q3, funding came down. This was 2022, 2 years ago. Funding came down Q3, it came down quite significantly. And since then, it's sort of been bumping along. So it looks like it fluctuates. And the fluctuations quarter over quarter, which is how we do our sort of best tracking, is really based on large rounds. So if large fundings come in that quarter, you will see funding pick up a little bit and then it'll go down. And so for the last quarter in Q2, it was around 79 billion globally. And typically more than half of that is or around half of that is for the US market, which is the largest market. So we're kind of on a sort of 79, 80 billion market track. That was up quarter over quarter, but if you look at this year for the half year, it was sort of flat or a little bit down from a year ago. So not a big shift, but the quarter was up. And, one of the questions we're asking is, with the quarter up a little bit, is that a good signal for the venture markets?
And is that up year over year or just this year?
It's up if you look year over year and also at the quarter. And I think the main, or quarter over quarter, and I think the main reason it's up, what we could see is, again, those larger rounds. So there was some big mega rounds that happened, as well as funding to AI companies. So that was the two kind of trends that we saw. And we also saw some of the more active venture investors that have really been holding back dive into the market a little bit more, and so increasing their pace a little bit. Some of the key large multi-stage investors seem to be leaning in a little bit more. So that is a glimmer that there's a little bit uptick, but these investors at the same time can step back, and we're going to be coming out with our Q3 report soon. And as you say, everyone's been off over the summer, so things might have just sort of fluctuated down a little bit.
It'll be interesting to see. There was one data request that we asked your team, and it was so great. You guys came up with this custom report. But we wanted to see quarter over quarter the last 18 months. How many deals were done and how much capital was deployed within each stage. So in Q2 2024, there was a huge dislocation in the amount of dollars invested and the number of deals getting done. So one would extrapolate from that most of the money is coming from later stage. That's where the money would be swelling. So it's like a really interesting scenario, because I feel like that's been most of the narrative this year, is piling all of this capital into later stage rounds for AI, for hardware, for really capital intensive businesses, just based on the current trends. And I'm curious, are you seeing that? Is that what the narrative is?
Yeah. I think the most interesting trend that we saw in Q2 was that AI funding massively picked up. It doubled quarter over quarter, and also year over year almost to 24 billion. And these are global numbers. The US was around 70 billion. So we saw a lot more money go into the AI sector this past quarter. And I think what's interesting about that is when, ChatGPT launched, for all of 23, we did see AI funding pick up. We did see proportionally more dollars go into AI. We saw that globally. We saw that in the US market. But it's almost like 6 quarters after that launch that you see the massive uptick. And I think what that shows is, within the private markets, it takes time for those companies to grow. It takes time for those investors to find those targets. A lot of these companies have raised, multiple fundings over this time, and they're now at the point where they're raising those very, very large rounds. So, AI as a sector represented 30% of all investments globally. So pretty noticeable. And obviously the biggest one was Elon Musk's XAI, which was a $6 billion round. But there were a lot of other companies in the sort of AI sector that raised super large rounds.
And are you and your team, are you reporting these numbers based on the date of funding or the date of the announcement?
So we do it largely based on the date of the announcement, because that's when, when the press release comes out or when the news comes out, that's sort of the most definitive moment to know. And if we did it based on when people invested, the data would shift all the time. But we also we have founders who report data directly to Crunchbase, and a lot of that will be the seed stage fundings, which don't typically get announced. And sometimes those get added way after a quarter or a year, just because you raise your Series A and then you go and put your seed funding in. But typically it's the announced date. But we also track, we work with investors on a monthly and quarterly basis to update if we're missing deals that they've done as well. So there might be some that come in that way. We also track the SEC. So there's a whole host of ways in which we go after that data. But I think the announced date is really, most of the data is really around that announced date.
In terms of the amount of dollars deployed and the number of deals, I want to go back to that and dissect it a little bit more. So you mentioned XAI was a pretty large component, a $6 billion round. That's huge. Did you see concentration into other companies too? And what were those companies?
We saw, companies like CoreWeave, which is also in the AI space, Wave, Scale, and then also Zyra Therapeutics, which is a stealth company that launched. They raised $1 billion in funding. They're sort of in the healthcare space using AI models. So a lot of those very large rounds that we saw this past quarter went into the AI sector.
Is there any way to predict them? Like how how do we continue monitoring this going forward? Is this going to be another surprise every quarter?
I think what it demonstrates is that, and some of this funding is not just coming from the venture community. Some of it is coming from private equity, and the private equity space. These are very, very large fundings, and also from companies themselves are investing. We've seen Microsoft, Google, and Amazon invest quite heavily in this space. So I think it'll be, one of the things that I did look at is in the AI sector, how does that compare to other sectors by stage? And what I found is that, when you look at seed and early stage, it was sort of in line with what you see broadly. For AI, it was sort of in line proportionally with those markets. But when you look at late stage, it was fewer companies raising very, very large fundings. And so there are these companies that are really sort of breaking out on the AI side. I think there will be more, but I think they're very competitive, these deals, and there are fewer of them that are really breaking out, is what I noticed for the AI sector.
Have you started to track the investors that are most active?
Most of the investors that I talk to will say that the sort of foundation model layer companies are not venture backable. They have to raise so much money and it's such a competitive space. And when you have Google and Meta and Microsoft and Amazon all playing in this space as well, these are not really venture backable companies. Having said that, there are some venture backers who've gone into those sort of foundational model companies. I think where most investors are looking for opportunities is in the sort of infrastructure layer, which is all the companies needed to kind of manage the data and process the data and manage those models. So that's where the sort of infrastructure, the tooling layer, and then the other area where investors are focused is on the application level. So I think the foundation level companies, there are investors investing in those, but the amount that needs to go in is so big that they're not necessarily diving in, but definitely at all other levels of AI. And I think what's interesting there on the application level is that there are new companies that will come out. And I think Clio and Harvey are a good indicator of this. I don't know if you saw Clio raised a $900 million round. It's in the legal tech space. It's a Canadian company. It's almost 16 years old. And I think that round of 900 million really represents the promise that AI can bring to their technology. They have a lot of market share already. They have a lot of customers, and bringing AI in will bring much more benefit to those customers. And so you can justify such a large round. And then if you look at Harvey just became a unicorn as well. That's a new company specifically focused on professional services and legal services using AI. And so I think the interesting thing that we're going to see kind of fight it out or measure it out is the incumbent companies who are layering in AI to existing customers, which do have an advantage, and then the newer companies who come out and building from AI right out the gate.
You mentioned earlier, because you're watching this data over time and you're observing it, you're making analyses, you track different narratives. And so I'm sure you catch wind of something that might be happening or might also not be true. Have there been any narrative violations that you've seen throughout the last year and a half that just aren't aligning with what people are talking about?
I think the biggest one is the kind of AI narrative and how quickly that took off because of the launch of ChatGPT, and everyone got focused on it. And everyone kept on saying this is going to change the funding data massively. And even though AI was a growing sector, it wasn't as significant as I thought it would be. It didn't really change the overall trajectory of the funding slowdown. So that impact of AI as a technology and AI as a thesis for investing, it kind of took some quarters for that to kind of play out. You would have thought everyone was going to throw a lot of money immediately. And obviously OpenAI did raise that $10 billion round right out the gate. But I think what was interesting is to see that it took some time for that kind of momentum to build within the ecosystem.
Hey, we'll get right back to the conversation after a word from our sponsor. Sorcery is brought to you by Archer. I'm genuinely amazed at what Archer has been able to accomplish. Archer's goal is to transform urban travel, replacing 60 to 90-minute car commutes with estimated 10 to 20-minute electric air taxi flights. They are safe, sustainable, low noise, and cost competitive with ground transportation. Archer's Midnight is a piloted 4-passenger aircraft designed to perform rapid back-to-back flights with minimal charge time between flights. Learn more about how Archer is set to open up a new world of opportunity for passengers by providing safe and efficient access to people, places, and events across the communities they live. Visit archer.com.
I also think, looking back at, in a way, the venture markets react more slowly, obviously, than the public markets. But I think what was interesting is Q1 2022 was a very, very strong quarter. And I think, in a way that was because if you look back at COVID, when COVID started happening, what we saw in our data is there was an immediate small pullback. And then venture was off to the races again, as everyone realized if you're sitting at home and everyone's kind of trapped, digital services are going to become way more important. And so more funding. And it took almost a year. 2021 was the biggest year. 2020, we were starting with COVID, but the biggest year for funding was 2021. It doubled year over year. And I think the same thing happened in Q1 2022. There was this sense of, is this a blip? Is this going to be more sustained? How do we react? And Q1 22 was incredibly strong. And then I think quite quickly in that quarter, there was a realization this was not going to be a blip. This was going to be much more sustained, that the markets were shifting quite dramatically. Tech stocks dropped dramatically. And so the pullback happened, but you started only seeing it in Q2. So I think for me, it's the venture markets take a little time to react, and it's not always immediate.
Yeah, that's a fair analysis. I know for a fact, like being on the investing side, it was not the most fun period. It was a cascading event of a lot of dramatic things, and a lot of different elements. Like we had massive overvaluations on companies that had zero to like minimal revenue, but got really great multiples. And so that's one element. Another element, SVB collapsed. And so that created more fear and panic within the markets of like, what is truly stable? Is anything stable? Like, what is VC built on and this tech hype? And then, throughout the last year, we had I think like, if anything, the ChatGPT moment was amazing because it then gave everyone at least some like revitalization and excitement to be like, oh, this is our job. We have to go find the innovation and now apply it. And this is our time to shine. And so that was good. It got some energy back in the system, but there were so many different things happening that were bringing a much needed just rebalance of the system. And then, we still have a hangover effect of the high valuations, and there's going to be shutdowns continually. I think Carta announced that there's like a 60% increase into I think Q1, maybe, not sure. But those are going to increase. And then, yeah, it's been a wild ride. So I would say it's not bad that we have this good moment and we can continue to find companies and back this next innovation cycle that's kind of taking off. Another thing that I wanted to mention within that is we have a big conflict with antitrust and the M&A markets, which are really pulling back exit opportunities. Not only are the IPO markets shut, but the M&A markets, it's been really hard to get large transactions over the line. I'm curious from your standpoint, is this a cohesive narrative? Like, are we seeing most of M&A shut down, or is it really large M&A transactions?
I think definitely the big tech acquirers are very concerned. And obviously these deals that we've seen around doing licensing deals and acquiring talent within the AI companies is very much a reaction to the regulatory environment. And I think, what we've seen on M&A is that it has picked up a little bit. This year it's picked up a little bit this quarter, but not as much as people have expected. Obviously, if you layered in those AI deals, I think we would have been off to the races, and M&A would have been back. But in speaking to analysts, the expectation is that the IPO markets this year there'll be some that come out. There'll be some brave companies that decide to kind of test the public markets. But broadly, they see possibly next year the IPO markets coming back a little bit more. And it's been so low that coming back, who knows what that looks like. But definitely the expectation wasn't this year. And I think a lot of people focused on the M&A markets are going to be a lot stronger this year. So I think there has been some pickup. We've seen, I was just looking at who are the most active acquirers. And there's obviously the private equity folks. If prices have come down and there's attractive targets, they're going to be looking. And two stood out for us, EQT and KKR, have both been quite active this year. And then there's also the public tech companies. NVIDIA and Cloudflare have been more active. Again, if prices are coming down and there's technology that you want to bring in, this is a good time. And then also privately highly valued companies are also seen to be, companies will go out and acquire, because for a lot of founders out there, if they're not going to if they're growing, but they're not going to be able to go public in the next 3 to 5 years, they might think, well, looking at an acquisition target might be, a comfortable fit. And so we've also seen Airtable and Zapier were two that were sort of more active this year as well. So I think the expectation is we'll see a lot more activity. It hasn't quite happened, but as I say, if these AI acquisitions had indeed been acquisitions, it would have been pretty strong. So I think there is some pickup on the M&A front, but not quite as much as people were hoping or expecting.
Are there any particular categories within M&A that are going well right now? Is it software? Is it industrials? Is it specific to tech, or are we seeing other categories?
Yeah. I think the companies that have stood up, there's some in the cybersecurity space because there's so much demand there. We've also seen some in the cloud kind of technology space, obviously in AI as well, because there's a lot of players, not just the foundation model companies. So I think we've seen a bunch in that area. So I'd say those are the areas that dominate on the software side. And then in biotech and health, there's a lot going on. It's less my area of expertise, but there's a lot of activity on the funding side in biotech and healthcare. Since the market has slowed, we've seen that sector still stay strong. Everything's down, but relatively speaking, that's been one of the strongest sectors, both for investment and for M&A.
There's another interesting outcome with exit markets being shut, or at least very hard to get through. And that's these large companies staying private much longer. Within that, we have like Stripe, we have Anduril, we have these really large companies. From your perspective, have you seen any specific kinds of transactions happen within them? Are they doing more secondary sales so employees can receive some compensation from their stock? What have you been seeing within those companies, and which companies are they?
I think what's interesting is we're definitely seeing the secondary sale phenomenon that you talked about. And I think Revolut just announced a secondary sale quite recently. And we've also seen, there were a few others that also did secondary sales. I think Rippling was one of them. Applied Intuition was another. And I think for these companies who are doing secondary sales, what it looks like to me is that these are some of the stronger companies who are possibly planning to go public in the next time period, whatever that looks like. And, for Revolut and some of these other companies, it makes a lot of sense to give employees, existing and some who've left, but to give them some liquidity now, because I think if you do go public and these employees have been locked up for a very long time and really need this equity to kind of build their own lives, the lockup period for most of these employees is about 6 months after going public, and that will impact the stock price at that 6-month mark and is not good necessarily for those companies. So I think if you're a strong company, as Revolut is, you're growing your revenue, you're profitable, you're looking to go public, and there are lots of these private equity investors who'd like to get their hands on some of that stock in advance of an IPO. It seems like a very good solution to give employees some of that liquidity so that when the company goes public and then when that lockup period opens up, they've already taken some of that risk off the table and then can make decisions based on how the stock's doing and how they think the company is doing, and not sort of be forced to sell at that point. So I think we're going to see more of this. But it's less the sort of M&A targets. I think it's more the companies that are thinking about going public and would like to, and as I say, are strong and have private equity investors who'd like to purchase some of the stock.
That's a good point. That's really interesting. So we talked about AI, we talked about the current state of the markets, we talked about M&A. I kind of want to take another macro step and talk about the power laws within VC since you've been covering it for so long. We covered this a little bit within the really late stage private companies that haven't really had their exit moment yet. But I'm just really curious, over the last couple of years, what percentage of capital has been deployed to only a few number of companies, and what are those companies?
One of the things that is interesting is when you looked at the kind of market growth in 2021, every single stage was up. Like seed was up, early stage was up, late stage was up, but late stage was up the most. And because there were these very large dollars going into these sort of high growth companies, we saw more unicorns than we've ever seen before join the unicorn board in that year. And so the whole story, even though every single stage went up, which makes sense because if you're investing at seed and you think your company, whoever you invest in, is going to be able to raise that next round quite quickly at a better valuation, you're going to be more inclined to invest. So everything went up, but it was late stage. And then when the market pulled back, it was late stage that came down first, the most dramatically, then early stage. I sort of saw it quarter by quarter, and then seed funding was sort of the last to kind of start pulling back as well. And I just looked at, the top 30 companies, specifically just in the US, that raised in 2024. And I think what's interesting, and I don't know if late stage has come back, but we mentioned Q2, late stage was up, these largest rounds was up. But when I looked at 2024, 30% of capital went to in the US, the top 30 companies that was raised this year so far. So that's for the first half. If you look at 23, that was also high. That was around 28%. And in 2022, that was 12%. So you can see the sort of in the last few years, the shift to those kind of larger companies or larger rounds are eating up a higher. And I haven't really thought about why or what's happening because I've been so focused on late stage coming down. But it is interesting to note that in some ways in this downturn, and we have been hearing this across the board, that round sizes haven't necessarily come down. The people are being more careful about where they place their bets. They're being more concentrated, so they're investing in fewer companies. And sometimes when they are investing, they're not investing less in this market just because companies are going to take longer to get to the next round, possibly, or are going to need more money to shore themselves up. And so there has been this trend towards fewer investments, fewer companies, but in fact, larger rounds. And I'm just working on analysis where we see rounds come down in 2023 a bit. They're still they're not as high as 21, but they're way above 2020. And now we've seen for the first half of the year, it's sort of come up again. Obviously, it'll come down a little bit as the long tail of fundings get added. The smaller ones get added after the end of a quarter, but we are seeing that pick up again. And so it is interesting, this conversation around how the industry seems to be becoming more concentrated, and possibly in a slower market that makes sense.
Yeah, and hopefully there is more activity on the later stages. I know some friends that got very bored in their jobs because there wasn't much to do. But that's only because there were so many mismatches between multiples and expectations and performance. Based on that and our M&A conversation, there is a large amount of trapped capital. We talked a little bit about secondary investments for employees. But where do we go from there? Are you seeing anything on the fund side?
I think broadly the market, I haven't done a lot of analysis on the fund side, but broadly in the market, the discussion is that fund size, that there's less funds raised in this market. Obviously, immediately after the slowdown in 2022, there was still some very large funds that were raised. I think that's definitely slowed, and it's probably becoming more concentrated as well. Broadly I think when you speak to venture investors, and you're probably very aware of this as well, is the liquidity concern is huge. And I think that came out in the Carter report that there hasn't been a lot of distribution from funds in recent years. So I think that liquidity question is very, very big for investors at this time. And I think that's part of, and I don't think they do have funds to invest. I think they've been holding back to invest those funds because of the lack of disbursements within the industry. And so I think there's a lot of waiting for the IPO markets to open up. And in talking to anyone, there is the sense, we have more than 1,500 companies on the unicorn board. Obviously, for a lot of those companies, those values would not hold up in this market. But for many of those companies, they've gotten their house in order, they've cut costs insofar as they can, they've gotten into shape in terms of looking at a path to profitability, they've honed their revenues. Some of those companies are growing at quite a great clip, as we saw with Revolut. And so I think there are a whole host of companies that are on the unicorn board today that would be ready to go out, but they don't think the public markets are very receptive. So I think that is a big concern. But there are definitely companies that are in shape. And I don't know if you track the Cloud 100 from Bessemer, but their expectation is that of the private cloud companies that are the sort of top 100, 97% of those would reach 100 million in ARR by the end of this year. So that's already a healthy kind of set of companies who are growing and have some significant revenue.
When did you start the unicorn tracker?
Oh, goodness. I think that we've always been tracking unicorns. I'm trying to think when we launched the unicorn. So we've always been tracking within Crunchbase Pro as a sort of list. And then we decided we needed a sort of definitive place to collect all of those companies. I'm trying to think when Aileen first came out with her story on unicorns, but it was after that. But it's been a good number of years that we've been tracking, but I'm not sure the exact year.
I feel like it would be a 2021 thing because there was just such a swell of unicorns and a rise in them within the different years. Maybe it's year over year. Like, was that the largest increase, and have we seen a dramatic fall since then?
And so a significant fall. So I think in that year there was close to, I'm going to try and remember, but it was almost over 700 companies or around 700 companies, and I can check, that joined in that year. And we're massively, 2022, so I'm looking here at the numbers. Yeah, 2021 was 621 that joined, so I slightly overestimated. So over 600 companies that joined in that year. And then I think what's interesting, and this is sort of points to the venture markets taking a little time to react, is 2022, that number halved, so it was around 300. So that's pretty strong, given that the venture markets have pulled back significantly for 300 companies in that year to join the board. And a lot of that was focused in the first quarter or the first half of the year. And then since then, it's been, you could call it a trickle compared to what was there before, but it's been between 2 in a month all the way through to the most recent month was around 13. So that's sort of been the trajectory over the last 2 years, is single digits or very low double digits in a month joining the unicorn board still. But what we do find is that unicorn board keeps growing because not as many companies are exiting the board. So it keeps kind of every month when we track this and do our reporting on the new unicorns, that number slowly kind of keeps going up.
How do you track the exits?
Just companies that are acquired or go public, so companies who leave the board, and then also the news announcements about companies that are closing down or are being dehorned and losing, their unicorn status. So we try to keep track of all of it to keep the board up to date.
Okay, well, it sounds like investors have gotten a little bit more disciplined in shelling out unicorn status, even in the age of AI. So that seems like a positive to me, if anything, discipline within the ecosystem. But who's to say that doesn't change next month or whatever?
Yeah, I think it's going to be slower for a while.
I think so too. So as we close out, I did want to mention and go into one category that you talked about in the beginning. So when you started out, you tracked female founders, and this has always been a small number. I've been working in VC for like 6 years now, and it's a small number. It just is. Like, female sole founded companies are rare. Female founded companies with a male co-founder, it seems a little bit more common. And then since you've paid so much attention to this, where is that going? Has this endured through cycles, or are we seeing an uptick? Is it going down? Like, where are we at?
Yeah. I've been in this industry for a long time, since the late 90s. And when I first joined the industry, I have to say there were very few women in venture. It was like there were standout individual women that you could point to. And similarly for female founders or female technology founders, there were very few. It was individuals, again, who were very well known in the industry and kind of stood out, but were these sort of unique, lone kind of individuals. So I think, one thing to be aware of is that over the last 20 years, and certainly over the last decade, and as venture has grown as an ecosystem with the whole growth of seed and the many, many more companies, that in many ways, and in venture and on the founder side, for me, it's changed quite dramatically because there were so few, there were hardly any women. There were certainly women working in tech. There were women in, leading PR firms, marketing firms. They were in very specific roles. So there were powerful women in the industry, but not always in those sort of venture and founder roles. So that's changed quite dramatically, but still the numbers are quite, there's a long way to go. So I think that, to sort of provide context, around 8% of companies that got funded in 2023, so if we look at the last few years, 8% were female founded, and they raised around 3% of dollars. So a lot of those companies were at the earlier stages because it's a smaller proportion of dollars. And then when you look at female male co-founded, it's about 14% of deals in 2023. And this past year, usually that's around 10 to 12% of dollars. Again, it skews a little bit more to seed, but a little bit less so because it's more proportional. But this last year was very high because of AI. So we've seen some significant AI companies, OpenAI, Anthropic being among them, that have a female co-founder. For OpenAI, those female co-founders or co-founding team are not with the company anymore. So the dollar amounts to female and male co-founded, there was a huge leap in 2023 to around 23%. But I think broadly what we're speaking is around 15% of dollars in a regular year. Around that amount went to female companies with at least one female founder, and around 23% of deal counts go to a company with a female founder. So those numbers are very different from if you look back to more than a decade back, but they've been somewhat consistent since 2015. And I think what's interesting is when people talk to me that when, venture went up massively in 2021, the perspective was female founders could lose out. And actually that went up as well. Proportionally, they sort of maintained when the market grew. And then when the market pulled back, there was also this sense of female founders are going to lose out. And again, they maintained. So this isn't massively shifting year over year by any percentage points. Sometimes you see 0.2 or 0.3 shifts year over year. Over a longer period, you see a shift. But I guess one, rosy thought is that the numbers women haven't lost ground. And because the ecosystem is a lot bigger, there are a lot more female founders out there. And I rarely go to a dinner or an event or I'm in a venture environment where there aren't quite a few prominent women on the VC side and the founder side.
Yeah, I guess that's positive news. Hopefully it continues to grow as we see more talent, especially come out of these AI companies, because it's a real thing. As we wrap it up, what are you most excited for this year?
I would say the IPO markets next year, maybe more than this year, is the IPO markets picking up. I think would be great for the industry that there would be more companies who can kind of go out. And I think there are a lot of companies that are certainly in shape to do so. I would say that more than anything else. And I think the whole AI wave is incredibly exciting. And the impact it has on tech is going to be incredibly exciting. So it does feel like a completely new journey. We tracked the mobile wave coming out of the decline in 2008. There were a lot of companies that were formed in that wave that we use on a daily basis. And so I think it's going to be exciting to see what comes out of this.
Amazing. Well, it was a great note to end on. Thank you so much for coming on, Gené.
Thank you, Molly. I appreciate it. This has been great.
There's no shortage of podcasts and deep dives into the secrets of VC, but the truth is that the world's best venture firms and GPs at their helm still remain an enigma. VC is as much of an art as it is a science. Other shows focus on the now of venture or even the last 10 years, but what separates the most enduring and generation-defining firms is the subject of a podcast called Turpentine VC from the Turpentine Podcast Network. On this season of the show, you'll hear from Ben Horowitz, Alfred Lin, Mahmoud Hamid, and more. Subscribe to Turpentine VC for the rare and revealing conversations that can only be had investor to investor.